Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein with your metals market update, and this is for the weekend edition on Friday, the 23rd of February, 2018, getting on about 2:25 in the afternoon. Interesting day, stock market taking off in a big manner right now, and it has just been picking up momentum all afternoon. We're getting a better bid in the bonds and the notes, and I think that had a lot to do with it, some of the pressure coming off. And as I had told you, we had big auctions this week in treasuries, and we have another sizable, I think we got about $100 billion coming up or something like that in the next week in treasuries as well. But we start tailing off now, and that often lets yields, if you will, fall back a little bit, and it's like a pressure cooker. As we got up towards 3% in the 10-year notes, it put pressure on the stock market and on the commodity market. Well, now we're seeing some of that pressure come off, and we're certainly getting a late-day rally that is pretty impressive. In the metals, we don't have an awful lot. You're going to settle around these levels that we're looking at right now. If you got my gold report, you know that we're not at breakout levels to the upside or downside, and I'll talk about that in a moment as we get into the charts. But the dollar up a little bit. Most of the currencies today pretty quiet, if you will, but it's been the dollar going up that has been pressure on a number of the markets. As we look across the board here, we're still seeing good prices on the energies. They're still moving up, and you're fairly flat in the nat gas. By the way, China's now the second largest importer in the world of natural gas, and that's because they've been getting away from all those coal-fired plants for making electricity. And in some of the northern provinces, which are huge in China, they are switching there from coal to heat homes back into natural gas as well. And that gets interesting play too. But in the gold chart, the one thing that I see, and while I look at monthly charts are a son of a gun to trade off of. But once they get moving, they move pretty neat. I mean, you're coming here from $10.50 up to $13. It doesn't look like it, but it's important. We're up at a resistance area in this market. And if you break out of this to the upside, what happens is this whole sideways band could become a base for higher prices to come into play. You'd have a lot of work to do to get under that. I'm not saying you can't, but it's easier to get to the upside because you're knocking on the door. When we come to the weekly area chart of closes, you can see how this market has gone on the attack from 1245 up to 1353.20, and it is admittedly backed off now. So from that high, the market is backed off in the neighborhood of what, $23 or so. Okay, still hasn't taken out anything major, and it is still trading over the 18-week moving average of closes, which keeps an upside bias. When we look at the chart action of this week, we have what's called an inside week. That means you didn't on the chart take out the prior week's high or low. It's a stall point. That's how chartists often look at it. Because the market's been in one, I don't read anything more into it other than it's a stall point. When I put on the swing lines, the one thing that we have are higher lows. And if we look at this high now, we have, let me come back to this high. This high was 1361.40. So you got to ask yourself, what was that high? And I'll take you right here, 1365.40. Do you see that right up there? So we've got a pattern also of lower highs, higher lows, lower highs, narrowing in like that into a trend. That's what this market's trying to do. Let's assume it breaks out to the downside, gets through this area right here. Well, the next support zone's going to be in the 1302 area in round figures. This number's going to go up this week. So while we closed here, as soon as you print on Sunday night the first trade, because it'll be a new week, it'll take that average, drop the lower averages back here as the 18-week, and it's going to move higher because that's what prices did. If you look at the Bollinger Band, you got stymied the first time here. The market fell back, came back to that area, and fell back again. Okay, so we're developing a resistance zone that we had before. We were in it right through here. Bollinger Bands are an algorithm designed to keep the market trading within them. There's a lower band and an upper band, and these are the black bands on the chart. 95% of the time. They can get out of them 5%. What I like to see is sideways action develop in a band to get a trend going. And what happened back here is you had a sideways area. The market broke out, created a higher trading band, and we haven't come even with that low back to challenge these lows back here. So the market, instead of galloping forward, and often you break these bands like, well, these aren't even fair to say because that's not it, but you'll see in corn and wheat and other markets that if you get a sideways action, you eventually move out of it. As the longer it is, the better. You want a great example? The VIX. The VIX was going sideways for most purposes, all of 2017. It went up to 50, 3 times its value. In the first part of February, it's back down to 17. But what happens is it acts as a catalyst the tighter the bands are. And go look at it and you'll see what I'm saying. But as I look here, we're still in an uptrend. We have upside bias in the market, and the momentum has not yet done anything. It's sort of waffling right here, going sideways. Could it break out to the downside? Of course. Can the market break out to the upside? Yes. But right here, there's no story. And in my gold report this week, that's pretty much what I said. I gave you the breakouts to the upside, the downside, ideas on what to do if it goes through either of those numbers, and I'll talk about that with you in a minute. But that's all that I'm seeing. So I am not saying that this market is bullish or bearish. You join back into the bull camper, it keeps going if you can get over these numbers, obviously. And 1367.60 is well over the last high that we made here, so that would fit in with trying to push the commodity markets as a whole higher, as many analysts think is going to go this year. Gold being a popular idea that people think. But remember, commodities, in order to make the commodity markets hot, you don't just need gold. In fact, you don't need gold. You can do it in all the grains, the meat markets, the energy markets. I can go on and on. The softs. Metals are just one play. When we go to the gold ETF, the popular one, GLD, momentum is also flat. The trend is clearly up. Similar, not exactly the same. The markets challenged the upper Bollinger Bands, ran out of momentum, but it still has the swing line with higher lows and higher highs. And like the futures market, they really do a nice mirror of each other. Lower high. So we've got that pattern where you're coming in with resistance points here, support points touching from this point to there, and we're waiting to see which ways they're going to break out. The miners are more of that sideways action that I've told you about. Very different than looking at this chart. Look at how long it's been going sideways. That's a lot of sideways action. The problem is it's bearish. You've got lower highs. You've got this low under that low. Bearish. You're under the 18-week average. Bearish. Momentum pointing down, bearish. No reason for 21.26 not to be in play. What would negate that thinking and turn the market instantly bullish? And there is a number. Just take out the prior week's high. You could end up, as long as you don't take out 20.84, I don't care what it does in between, with higher lows, and then you'd have a higher high over the 18-week average. You might put 23.76 into play. So you start thinking the game plans. But right now, I think the bears have control of that market. In the silver market, I see a pattern here of lower highs, lower lows. That is not bullish. To get bullish, you'd have to get over 16.95. If it stays bearish, a possible target is the 15.79 level. If the market takes out 16.95 without taking out 16.13, you'd end up with higher lows, then a higher high, and you'd put 17.33 into play. Momentum, not giving us an indicator on it. Copper market. Copper has thrown out a series of lower highs, but each time it tries to break down, it fails. It's unable to stay under that 18-week average of closes. Not a bad sign if you're a bull. Also not a sign to be bullish because you don't have the pattern of higher lows and higher highs. What you do have is momentum is still pointing up on the weekly chart, and the bias is up since you're over the 18-week average. But you're not with the swing line, and I like when all three parts are together. The platinum market is bullish still. Now, if we take a look, we've got the higher lows. Yes, we had a reversal, but we didn't make a swing line high yet. All you need to do is take that out, and you don't have it. So you've got higher lows and higher highs. Support starts back at 970.870, the 100-week average of closes. The momentum's up, the bias up. So this market is still in the bull camp. In the palladium market, you have nothing. You've got a market with a higher high, a lower low. It has been stuck trying to trade against this 18-week average for 3 weeks now. Momentum has also gone flat on you. In the dollar index, the weekly chart has not done what the daily charts have done. Daily charts are not in a bull pattern. They're in a nothing pattern. This has stayed overall bearish with lower highs, lower lows. You'd have to take up 90.45.5 to break that pattern. Momentum, admittedly, has gone flat, and I like to see momentum leading price, and it's not doing anything. It's just sort of laying down here, and that if it stays like that and prices were to break back, you'll embolden the bears in the market. The bulls have on this chart, no story right now. What do I mean by that? Let's assume you take out 90.45.5. You're still under 91.97. So you'd have the two fighting each other in terms of the bias down, and you break the bear pattern. That's about all that you can do. I don't see anything here other than getting a strong close immediately over 91.97, which would be a big story, but you realize that's 200 points away. Something major would have to happen in the world. It can do it, and that would put the market back into a bullish phase. So that's about all that I see out of that. As I said, I wrote my gold report, and if I can get it to play, I don't know if it's going to. But to make a long story short for you, I don't know why it's not playing, but I'll feel like re-recording. To get my report, if you haven't received it by mail already, you're just not going to get it because it's all been sent out. To get it, go to our website at www.iraepstein.com. Call us, 866-973-2077. That's on the bottom of the pages here. You can click right up here. If you're watching me on YouTube, there'll be an icon there. And what we did this time is I talked momentum. I did not talk the trend. I gave you two breakout points, one to the downside with put options, one to the upside with call options, and I'm doing spreads in them since what if you hit breakout points and you don't follow through to cut risk down. But if the market then breaks out and goes, these make, I think, sense. Does it mean they'll win? Of course not. I mean, I can never guarantee anything, and I wouldn't guarantee it. Do I think they have merit? I do. So if you're interested in reading that, give my staff a call, go to our website. You have a great weekend, and I'll see you all come Monday. Take care now.